Oh, you can do it too. Okay.
Yeah.
Oh, so I just click like that.
Hey, folks, Denver here, the rate update. It's me and Nico. Today's biggest thing, I got him back. So today's biggest topic, recession. Everybody that's posting recession on their thumbnails are getting bazillions of clicks, and they're saying the world's going to end and everything else. So while we're waiting for a lot of people to join us, we're just going to chat a little bit. We're going to just give you, I'm trying to change my format. If you guys, as you come in, if you would, please just let us know where you're coming from. Give us a thumbs up if you don't mind. And again, my team is federally chartered at this point. So anywhere in the country, we can and should be able to help you out. That's that part. But today's event, we're going to talk about or really break down the recession thing. It's got a lot of people fearful, and prices are starting to stagnate in the housing market. Maybe not. We're going to have a special guest on about 7:30 to talk about the Phoenix, Arizona market. And then mortgage rates, they're spiking. So between mortgage rates going up as fast and as high as they have been over the last 3 to 4 months, that on top of housing prices are ridiculous, I agree. But that coupled with all this other stuff is just going to tank the markets. And I think the markets are going to do the Federal Reserve's jobs for them because just gas prices alone. I was on my way home from work this afternoon. Gas prices in Chicago are now out in the burbs, $6. What are you seeing downtown?
It's almost like $7.
It's nuts. So just 3-4 months ago, it was $2.50. Okay, so you guys get it. The inflation piece of this puzzle is rampant everywhere. But the biggest thing I want to focus in on is gas prices, and I'm going to show you some information. There's some articles that we have, and it depends on how much time we have. But guys, the biggest thing I want you to take from this, yes, is there a recession coming? I am all on board with a recession. Yes, there is. We're probably going to have that at the end of June. So that's what we're going to start talking about. But I want to calm your fears. Okay, I want to calm your fears because not all recessions, most recessions do not come with a crash in home values, even though everybody's telling you, oh, okay, well, 2008, everybody's agenda always encompasses 2008 to make sure you get the fear factor behind all this to say, oh my goodness, house prices are going to go crazy and drop and so forth. So without further ado, as you guys come on, if you would, please just let me know where you're coming from. Give us a thumbs up if you don't mind, but let's get on to it. Recession. Nico, what is a recession? What's the definition of a recession?
Alrighty, cool. So let's break down what a recession is, or let's first break down kind of just what the definition of a recession is, right?
Sorry, does that mess you up?
What's that?
Does that mess you up that we're at the bottom, or you like that better?
Oh, no, I'm good. I'm kind of looking over here this way. So You're good. So guys, right here, the common definition of a recession, it's going to be 2 consecutive quarters of a decline of GDP. But this isn't necessary for the economy to be in a recession. A recession just needs to be a contraction of the economy featuring sinking production and consumption, higher unemployment, and sometimes lower price levels. Does that sound familiar?
That's a recession. So what are we seeing today? We're seeing employment numbers. The unemployment rate is fantastic. The participation rate is terrible. And more people keep filing for unemployment claims. So what does that tell us? In my mind, we don't have a robust employment scenario. I don't know about you guys, but we got somebody from northern Texas. Let me know, on your way to work every day or your way to get gas or groceries, how many help wanted signs do you see? So if the employment numbers were so great, there would be a lot more employment. Manufacturing numbers starting to decrease. But the biggest headwind here, and I'm going to say it now, and everybody's going to add to this agenda as we go through, energy and food. Those are the 2 biggest things that are going to basically screw up this whole economy. And we are not in 2008. Okay. So Nico, if you could show us just some highlights, and guys, we're going to post down below where we're getting this information. Now, I've watched several people's recession videos, and it's easy to just find that one person that's going to talk about saying, here's what happened. And they always reference 2008. Well, we wouldn't have been in a recession or the Great Recession if we didn't have a complete collapse of the housing market. Okay, this piece of the equation in a recession is caused by COVID. Okay, everybody shut down. right? So then people kept buying. The governments kept stimulating the economy. So people had the money to continue to buy. But if the world shut down, nobody can manufacture it. Nobody can ship it. And that's what created this headwind. Now what we see is a lot of everything's trying to catch up, and we can't. So the prices are going up to hit an equilibrium and everything else. The Ukraine-Russia war is a good excuse for high oil prices, but Russia doesn't really supply us with a huge amount of oil. So it's another smokescreen. So those are the things that we're seeing. But Nico, if you can bring up some of the captions in regards to, what is a recession? What happens to real estate during a recession? How does it usually take effect? And then what I'll do is I'll put this in context for you guys. Housing can do two things: stay high or crash. And we're going to get the, hey, eccentric, you added your picture. I'd like to see I was wondering who you were. We're going to start asking or answering comments here in a second, but please post your comments so you can get in line, because we start at the top and work our way down. But we'd love to know where you guys are coming from.
So I'm just looking for this one post. I don't think I can find it, but in this article, it says one of the main factors was subprime or loose lending standards, but they said there's a lot more to it.
That's
right?
The last link I sent you, the cause of the Great Recession.
Yes, sir. Right here.
Yep. So if you can click that, the first part of it, can you zoom in at all and just see what was the culprit? What was the culprit?
Right here. Right? The Great Recession, one of the worst collapse. Okay, I got you. The collapse of the housing market fueled by low interest rates, easy credit, insufficient regulation, and toxic subprime mortgages led to the economic crashes.
Okay, guys, let's focus in on that. Let's go one by one. What was the first one?
All right. So the Great Recession was one of the worst economy declines in the U.S. history. Officially lasted from December 2007 to June 2009.
But what was the culprit that it said? What were those?
I'm sorry. I'm sorry. Low interest rates, easy credit.
But hold on, one at a time. Low interest rates. We got them. So could that be a factor? Yes, it could be. Next.
All right. Easy credit.
No. Because, you read it right, but I'm saying that's not a part of this equation. Subprime has been out of the mix for the last 10, 15 years. Okay, so you don't have easy credit standards. The next culprit.
Yeah. Insufficient regulations.
That's gone too. So what happened back in those days, pre Dodd-Frank bill and prior to the CFPB and prior to all this stuff, it was rampant. It was the Wild West. Okay. So that is completely a different scenario than today. We have much, much, much more regulations today. And the final one, I think it's the final one.
And I'll after I say this one, I just want to add in, but the next one is subprime mortgages.
Okay.
And the thing I want to add real quick, guys, I got into the business after this happened, right? So for me to get into business, I had to get licensed as a loan officer. I had to register with the NMLS. I had to take 8 hours of courses and all this, right? Back in the day, you could just kind of be a loan officer.
Yeah, that was it.
Right?
Fraud ran rampant because it was the Wild West. But the subprime market was the biggest factor. And that's what I still can't get through to everybody, because all the naysayers, the guys that I need to start just putting doom and gloom on my YouTube thumbnails, because those guys get the billions of clicks. And then when you listen to it, they make pretty good sense. But they only say one side of the equation. Guys, if the housing market was going to crash, I have no problem telling you that. Yeah. What's in it? You guys say, well, I do mortgages for a living. Be honest with you, I've done this for 33 years. I've always made a lot of money other than 1 year. And that was the year of the Great Recession, because all the banks basically shut down. Other than that, I've made a great living for 32 out of my 33 years. So if the housing market was going to crash, I would tell you it's going to crash. But there's so much data here that people just don't look at or don't want to look at, because it's like going past a wreck. You sit there and rubberneck. You got to see what's going on. The news, you click on the news. 4 people got murdered today, a train wreck, a ship crashed, and there was a shooting. I'm not making fun of it. I'm just saying that's the news. You never hear about, hey, a good Samaritan, bought somebody groceries and drove them home. Who's going to click it? But if you say something about, a mass shooting or something like that, man, you're going to get a gazillion clicks. Okay, so I'm sorry, Nico, go ahead.
And Dan, I just want to add, the subprime thing in 2008, 2009, people bringing that up. I was just with my friends, and my friends said the same thing. But and after I explained it to my, all my close friends, they understood. Back in the day, guys, when we say not subprime loans, there was loans where they did no income, no asset verifications. Yeah. So no wonder houses were going into foreclosure.
Yeah. So it was basically what I want to explain to you is you might be able to pull up if you can, what happens. It was the second link.
Got it. Right
during
here.
A recession.
Yes, sir.
And what I want to do, Scott Murray wants me to let you talk. Scott, he's with me. He's part of my team. He's the kind of the setup man. So I appreciate it, but I'm not picking on him. Nico's my man.
What part in here, Dan, would you like me to?
If you would go through some of the content, I think down below or mid part of that, it talks about real estate where it doesn't necessarily have to go down.
Yep. Go ahead, Dan. Why don't you give a little talking and let me do a little.
So while Nico's finding that, let me go and answer some of the questions that you guys have. But please start asking questions. I'm sorry, there's a little glare. I do this in my backyard because we only have about 3 months to enjoy this stuff. So I'm really trying to enjoy my backyard. So we got one that said they stopped in prior to me going live. We got another one. I got to put my glasses on. I'm an old man. We got the next one. Owen, he is from Northern Texas. Thank you so much for joining us. You know what? We do this so late because you guys on the West Coast or farther west, I want to give you time to get home. The next one, housing can do two things: stay high or crash. No, well, yeah, I guess you could put it that way. It will stay high. I'm saying it's going to stay stagnant. Some areas are going to see a reduction. So you have the average house in the last 2 years is up 30%. Okay, you can do any research you want. You can go to actually the Google search, and there's government statistics on that. And I actually looked it up today because I was prepping for this video. But there's a lot of areas that have seen 30% in the last 6 months and in the last year. So 50, 60, 70% in the last 2 years. Are those markets going to take somewhat of a hit? Yeah, maybe, probably. But you're going off such high levels. What I'm trying to explain to everybody is, will there be a crash? My piece of this is saying, a crash, what I would be looking at as a crash is maybe 30, 40, 50% correction. I don't see that. There's too much demand. Even if rates go up, there was an article that I read this morning that says if rates go up to 6, all bets off. The housing market is doomed. Well, let's put all this into context, okay? So here's the thought process behind all this. Now, we know what a recession is. A recession, basically, by definition, is 2 quarters of negative GDP. Well, the first quarter of 2022 had a negative GDP. We know that. So far, next quarter ends the end of this month. Are we going to have positive GDP in the second quarter of this year? No. So by definition, we are in a recession. So what happens is most of these indicators are lagging. So what you're going to find out is, 6 months, 12 months, 18 months from now, people are going to say, yep, we're in a recession. But if you go by definition alone, at the end of June, it's going to validate we're in a recession. So were you able to find the articles? And we have Rick Mahone on standby. Hold on, Rick. We're going to bring you here in a minute. He's the guy that we were trying to get the other day. He had some issues he couldn't attend. So we asked him to come back on Thursday to give us his information. We're going to ask him the same thing, but he has boots on the ground so he can explain to you guys what he's seeing. And I'm not prepping him. I didn't prep him. He's going to tell you the facts out on the West Coast. And what I'm trying to do is get more and more realtors on here because they got the boots on the ground. They have the data. They have the MLS data that provides us with the information to either validate what I'm saying or contradict what I'm saying. And then I can come in and say, guys, I was wrong. Okay. So Nico, what do you got?
Dan, I am sorry to inform you. I cannot find that piece. I apologize.
Ask any questions that you have, but basically a recession. What happens in a normal recession? Okay, we're in one. But other than the 2008 Great Recession, we have not seen a housing crash. Actually, in most cases, the appreciation has either stagnated or actually went up just a little bit. So that for the naysayers out there, that's the facts. Do as much research as you want. I am all for that, because that's what the whole channel is, for us to educate and inform you guys everything in real estate, especially the financing piece. Okay, so that's what's going to happen. What I'm looking at right now is on the recession piece. Let's play with those numbers. So what you're going to see is this might give you a good time to, if you're buying a house right now, I'm a huge proponent, don't pay points. Try to pay the minimum in lender fees as you can. Why? I don't want you paying a ton of points. We've seen $8,000 to $12,000 in points people are paying right now on loan estimates we get. I'm like, please don't do that. But I need the rate. Okay, guys, I'm almost confident that we're going to get a reprieve in Q4 or Q1 of 2023, where the Fed's going to have to step in and say, oh, we overdid it. Because what happened? The markets did all this for us. Between gas prices, inflation, food prices, and everything else, that is going to curtail this inflation or add to it unless we start getting more oil, because oil is the key. Okay, so that being said, let's bring in Rick Mahone. Sup, buddy?
Hey, welcome.
How you doing? He's got a YouTube channel. Rick's out in Phoenix. He's a realtor. I love his content. Him and I was saying before when I was going to have you on Tuesday, we're the OGs.
I'm older than you. Don't kid yourself.
We've been through the brutalness of all this market. So welcome. Tell everybody about yourself.
Oh gosh, well, welcome from the palatial estates of the Rick Helps Real Estate Travel Trailer. I'm up in the beautiful town of Prescott, Arizona. Awesome. Just one more night. Just came up, spent a couple nights to escape the brutal heat. But I'm going to be driving back into the oven tomorrow morning. So just taking a little break up here. I love it. I love the city of Prescott. So
good thing it's dry heat.
Yeah, it's not that. I lived in upstate New York, and the first time it hit 90, I thought I was going to die.
Yeah, I know.
And I'm from the Pacific Northwest too, so when it gets hot up there, you get really sticky.
You're like high def. I'm out in my backyard because we can only enjoy this for about 120 days. So
yeah, it's like, a nice background. Looks like a really effective green screen.
It's my backyard. So. If you saw all the chairs, my wife thinks we have a convention center here every weekend, because there's like 12 chairs back here. If you're ever in Chicago, look me up, buddy. You're more welcome to come by.
So can I ask you old school guys a question, I guess? So I am 29 years old, right? So when the first recession that I was alive for was in 2008, right? I was in school then. I didn't really know what to happen. So what can I expect, or what can the normal consumer expect, or a younger person expect?
That's a great question. So you want to know when I was in high school? It was President Nixon, and we had that wonderful recession where we had the Arab oil embargo. And you I had a trip to go to California with a friend, and you could only buy gas on odd and even days. So in order to drive from the Seattle area down to California, you had to have gas in your trunk. You had to have uncles and cousins along the way that had gas in their garage. But he was the worst of the worst when it came to implementing things like price controls. So in other words, you couldn't raise the price of meat. They froze it. You could not get a raise. So lo and behold, all of these controls, everybody bypassed them. So in meat, you had hamburger. Then all of a sudden you had lean hamburger. Then you had premium steaks, because then you could ask more for it. So you had name changes, and you couldn't get a raise at work unless you got promoted. And the grocery store I worked in one day, I'll never forget it. All of the managers there, just the front level guys, small grocery store, came in there all wearing these tags that said vice president. And I didn't understand it. Well, they promoted themselves to vice president so they could get a raise. So I was carrying out groceries at the time. I was what's called a bag boy. So I made a tag that said bag manipulating technician. I didn't get a raise. But that recession really put a cramp on everything. I remember a billboard on the outskirts of Seattle saying, "The last person leaving Seattle, please turn out the lights." It was awful. Then here comes Carter administration. This is at a time when the Federal Reserve chairman clamped down on rates, raised rates like there was no tomorrow, because our inflation was out of control like today, and raised rates like there was no tomorrow.
What?
Well,
remember,
I think the prime got up to what, 17? Mortgage rates got up to 17.
Yeah. So I'm a proponent too. If rates hit 18, everything I'm telling people, it bets off.
Yeah. You know? Yeah. And but here's the difference, I think, between now and then. In 2008, I'll touch on for just a quick second. But
sure.
The difference then was, we didn't have internet. We couldn't research it. All I knew is I just got married. We wanted to get a house, and we were the largest buying pool ever. And we just wanted a house, and we ignored the economic data, and we went out and found creative ways to get our house. I had 11 3/4 mortgage. Get this, negative amortization, because I was confident that I could refinance it later. And I did. My dad was a real estate broker, and he's like, Rick, you're nuts. I said, could be. And so we got the house, and had friends moved in down the street, and it's just, we were a large buying pool. Fast forward the tape to 2008. We all know what happened then. It just, the real estate market caused the recession, whereas other recessions caused maybe some type of fluctuation in the real estate market. But the historical data doesn't really show you any clear signs that say, well, if we have a recession and we go down 5%, then this is what happens to real estate. There's nothing there. It's like looking at a hurricane that's headed to Florida and say it's going to hit Miami unless we have a high pressure system that comes into Georgia that takes it and puts it down to, the Florida Keys, or if we have any wind shear. I mean, we just don't know.
Great point.
Asking real estate agents to say, what do you think the real estate market's going to do if we're in a recession? Look, we're in a recession now, today, because of those three pillars: gas, food, and interest rates. And recessions always show up in the rearview mirror. You know what I mean?
Yep.
So, because they come out and they go, well, last quarter contracted by 1.5%. Oh, I didn't know it was that bad. And so we're there now. How much worse it's going to get is anybody's guess. But until we solve this fuel problem, what I'm seeing here in Arizona is we have areas where buyer traffic is still relatively strong. But we're seeing inventory increase. But I always like to say that a large percentage of a small number is still a small number. Yeah. Our inventory went up 92% compared to last year, but we're still only at 11,000 units today. Yeah. And historically normal's 27,000.
And a lot of people use the historic data from last year or 2 years ago. It's like also saying, well, foreclosures are up 5,000%. Well, you went from 20 to 200, and it's okay. There was a moratorium on foreclosures, so that's an easy one. Unless people really know that, it's one of those easy things to say, okay, foreclosures are up a bazillion %, but unless you give it the context, then everything's missed out. So you probably enjoy the increased supply. I would assume so.
Oh, I do. I think every real estate agent in Arizona right now is very happy that we're heading towards perhaps a balanced market. We're not real jets. It's not really that the rate's 5.5% that's knocking everybody out. It's the combination of the rate and the price. So we have to be careful to go, oh, I paid 11 3/4. Yeah, but I only paid $103,000 for the house.
Yeah.
And, my wages. So you really have to look at what the payment is in relationship to your wage. And right now, we're blowing past that, and affordability is a problem. So I think agents have to be careful. Don't, if you're an OG like me, you don't want to go, oh, well, I paid 11 3/4. Yeah. But there is definitely a disconnect now, and people are pulling back there. And, but in Arizona, I track it every day, and I do a 7-day moving average, and we were averaging about 4,100 homes going under contract every 7 days, 4,100 homes being listed every 7 days.
Oh.
This morning, we had 4,200 homes coming on and only 3,100 going under contract. So the number has shifted.
Right.
So, but it's not like sales have plummeted. That's down 11%. But that 11% are people that just said, I gotta step on the sidelines for a while.
Yeah.
And so there's a lot of people waiting, and people that are waiting for a crash. I don't see the numbers yet.
I'll say
on the video.
Go ahead, I'm sorry.
Oh, go on. No, go ahead.
I was just saying I'm going to tell you that's a lot of the millennials or people my age. Everyone's waiting for that crash because we lived through 2008. We saw houses going for half the price. I mean, my parents' home in Illinois, it went for half. I think, let's leave it at that. It went for half.
Well, okay, so let me ask you, statistically, how many crashes of that magnitude, how often does that happen?
Not too much. I think that might have been the only one, maybe one of
every 70 years.
Every 7 years. That big though? That much?
Yeah, every 70 years. And so if I'm 67.
You lost me on that one.
That's the first crash I've seen. So, well, statistically, a market crash of that magnitude in real estate happens every 70 years.
Really?
So if you're waiting for a crash, you got to wait till you're my age.
So you said 70 years. I thought you said 7.
I thought you said 7. That's where I was like, you got to clarify that one for me, because 7 years you completely. So 70. So I get it. So that's why when you're talking to buyers, you're talking to sellers. What are they? I guess in Nico's he's one of my loan officers. So he's on here. He's the millennial version of this, just to keep me, the normal OG, on here in check. The first question I have is what is deemed a crash? Rick, I'll ask you that, because I'm looking at 30, 40, 50%.
I'm right there. Yeah.
Okay.
Yeah, I agree.
So I'm just want to make sure I'm not on my rocker. And a lot of times is like Nico, why I have Nico on here is he can relate with you, and I can relate on Rick. You and I can relate, because my first loan I moved from West Virginia, where the average house was 75 grand, to Chicago, which my first house was 130,000. My parents thought I was buying the neighborhood. And I got a 12.99 ARM negative AM. Now, if I posted that out there today, people know they would run for the hills. But at that time, it was like, okay, well, that where I rent, the payment's kind of the same, but I'm building some equity, and I'm glad I did it.
When I wrote the contract on the house my wife and I were buying, my brother came over. He lived about 2 hours from me, and I put him in the car, and I said, let me show you the house I'm buying. And I'm pulling down in this neighborhood and going on the street. And I pulled into the driveway of the absolute worst house ever in the neighborhood.
Ding, ding.
I pulled in, I put the car in park, and I smiled, and he just goes, no, I'm kidding. Let me go show you the house. I think
okay.
30 to 40% is a crash. I would agree.
So in your market, what are people saying are unless it's a millennial, which I get, and I'm not trying to extract out the millennials saying you guys are a whole different breed, but what are you hearing from people, the people that are still looking to buy? Are they comfortable with it? Are they uncomfortable with it? What are you hearing from your buyers?
Depends on the price range. People that are looking to buy, and they're not first-time home buyers, and they don't have to scrape for the down payment, but they have a decent down payment, and the interest rate isn't scaring them off. They are pretty much drilled in that they're going to stay at least 5 to 10 years.
Got it.
So they're in the market. They're both feet in. The ones that got priced out, the rate went up, they're literally just sitting at home in bewilderment.
Yeah.
I don't know what to do. How long do I wait? Rick, do you think this is going to crash? And on my channel, I say, look, I'm not going to use the word crash until I see it.
Right.
Because I'm going to tell you what the numbers are today, and you can glean from that what you want. But here's the inventory. Here's what we got. And I share a lot of data, but I also put an analogy that said, look, if there's a crash coming, it's kind of like when you're skiing down the ski slope and you want to stop at the lodge for the hot chocolate, and you're going too fast and you're not going to make it.
Dude, I love talking
start
to you.
shouting and telling everybody, get out of the way. And so if the data starts looking like I'm going too fast on my skis, I'll tell people.
Yeah. That's why I reached out
now,
to you. It's like I'm like listening and looking to myself in the mirror, kind of. It was like, and that's not why I reached out to you, but it's like you've been doing this a long time. Other than some of these people that are posting that are 30 years old, they've never seen like Nico. They've never seen a rate at 6%. So it's hard to bring in the context of, the world is ending. Because I also want to say one of the reasons why I reached out to you too is you're in Arizona. Well, it's different there than Florida, than Texas, than New York, than Michigan. So there's.
Yeah. The other thing to consider too, Dan, is that, recession is a word, but recession could also be very hyper local. So right now, you're probably not going to have much of a recession in the areas of the country that produce oil. But, there were recessions that absolutely killed the aerospace industry. Like Seattle and Boeing. There are recessions that take out, retail. So all of that is very segmented and local. Arizona is the one that had the savings and loan crisis back in the late 80s.
Yeah, I remember.
The .com thing affected all of the San Francisco and California and, the high tech areas. So it's a recession is just negative GDP growth.
Right.
And so people need on YouTube is to do a lot of research, because remember, I'm licensed to be a real estate agent. I'm not an economist. All I can do is say, here's the numbers. Here's what they mean today. Here's how it's going to affect the next 3 months based on a trend. 2 weeks doesn't make a trend, but 5 weeks might. And so all I can do is say, here's what because I have access to numbers that, mom and pop don't have.
Right. And that's why I asked you to come on. Here's
what we see. And then and there's you can get your share of crashers, and that's all great, and one of them is going to be right, but CoreLogic predicted in 2021 we would be down 6%. So even the great minds out there are blowing it. So I'm not going to be any better than that. So.
I get it. So could you dig into some of the numbers for us just to bead down, like when we talked the other day, what I was looking at is, how many houses, you said how many houses are coming on the market. Are the price stabilities, where are they at? How many bids per contract do you have that? Does it show that data, like bids per contract? Are they starting to slow down?
Overall in the total market, we've gone from 60% of the homes going above list price now to about 48%. We have 11,000 homes on the market this morning, and that's roughly been about 6,000 units a month back. So we have a 92% increase in listings. Sales are kind of plateauing between 3,100 and 3,500 every 7 days. That's staying level. It's dropping. Depending on the price point, the 500,000 range is still pretty brisk. The bidding wars have not gone away. But it depends. The traffic is lower. Open house traffic significantly lower because people they're not going to fill up their car with gas just to drive around neighborhoods. So the online traffic is way up. The other thing that I like to look at is listing success rate and price reductions, because you and I are drilled into the market. We know the numbers and we can see where we're at today. But when people list their house, they're absolutely cold stone. My neighbor got this. Why can't I?
Right.
And there's no getting them off that perch until they list their house and it doesn't work. You can show them all the numbers in the world. Well, my neighbor got this. Yeah, but that contract was written in February and March.
Yeah.
So they're shooting for the moon. So we right now have a 30% of the homes have price reductions. That doesn't mean that the sales price is crashing. That means people thought, well, I think I can get this. And you've got these commercials on TV that go, I got $50,000 above market value. What's market value?
Right.
Market value is somebody that says, buyers that say, I want to give you this much. There's no such thing as a base price. That commercial drives me nuts.
I know.
It's, they came in and they got me 50,000 above what it was worth. No, what it was worth was what people were offering you. That's what it was worth.
And that's why I try to explain to people too. The value of something is what somebody's willing to pay for it. And you know Jeb Smith. You see him?
Yeah, I've actually been on his show. Yeah,
got it. Cool. He's a great guy. The verbatim of what you're saying is what he was saying he was on the show last week, and he's saying the price point's still there. What's happening is a lot of sellers, and you and I know this, everybody thinks their house is the best thing since sliced bread and the nicest thing in the whole neighborhood. And he's like, I have sellers. He's in the multi-million-dollar section, but he's like, I have them that said the same thing. My neighbor got 2.5 million. I want 2.6. You're not going to get it. Well, I want it. So you list it, go. And then when the price drops, then you have all those out there that are saying, see, prices are dropping all over the place. Well, it's still an inflated price.
Well, my neighbor just moved in and they offered this house and they didn't request any repairs. How come I'm doing all these repairs for my buyer? Well, you have a different buyer and the market changed. What can I tell you?
Because your garage door's laying in the driveway.
See, before pricing decreases start showing up, sellers start giving concessions like that. I'll give you a home warranty. I'll fix more of the things on the punch list, and they might move a little bit on price. And then eventually they'll have to start moving a lot on price. But look, buyers are savvy now. Buyers are not dummies.
Yeah.
They know where the market is and they have a high suspicion of where it's headed. So they're looking at your price now and they're going, I don't think I'm playing in that sandbox.
Right. So that being said, I'll be the devil's advocate on that. So then as the buyer, should I then just, I'll wait till December possibly when the market's slow anyways. And would that be something that you would advise?
That's the catch-22 that I can't answer. And here's why, because if I wait, I think their asking price will come down. I mean, by September here, I can definitively say we'll be knocking on the door of a balanced market, equal between buyers and sellers.
Good. Yeah.
So say, so the bidding wars are going to be out the door. You're not going to have to put in these appraisal contingencies, these waivers. But beyond that, well, now you got to go, well, where are rates going to be? And so you might get a lower asking price on the house. You may even get a lower sales price on the house, but rates might be crazy because for crying out loud, today, Janet Yellen, the Treasury Secretary, says, I don't see any chance of a recession. What are you smoking?
Yeah, seriously. Well, how about the Fed last year? Fed last year said, we will not be increasing rates until at least 2023 or beyond.
Yep. Yeah. So they're going to have to clamp down hard to tame inflation. And I hope they don't do it to the extent that Paul Volcker did. But,
explain that for the ones out there that don't know that. I know it. But
Paul Volcker was the Fed chairman for Carter and into the President Reagan's term. And he raised the prime rate through the ceiling because inflation was so bad that you have to squish the economy. You have to slow down consumption in order to tame inflation. And right now, the Fed has $9 trillion on the balance sheet, unprecedented. And we've all heard that, well, once the party gets going, they'll take away the punch bowl. They got like 9 trillion punch bowls out there right now. And so they can't just remove it. And they're saying that they're going to start pulling it back at 85 billion a month. Well, 9 trillion divided by 85 billion, they're going to have to raise rates to an unprecedented level if they really want to tamp economic activity. And the problem is, this problem is global now.
Right.
More so than ever before.
Yeah.
So I'm worried. I'm concerned generally over the economy. But there's also a lot of arguments that can say if this fuel situation gets under control, and the upcoming food crisis isn't as bad as it looks like it might be, and food gets under control. I used to be in the food industry for 35 years. Then there's a ton of people that want to get into this housing market.
So bring me up to date, because I don't follow the food part as much. I watch oil because that's, for me, that's a huge piece of that inflation puzzle. Food has been, but it's been basically, fuel and energy and used cars and such. I don't really track the food piece of it until just recently. But I didn't know you were in the business. What's your thoughts in that area?
Yeah, I used to be a director of sales for a major baking company. And so the cost of everything from the petroleum, what the bread is wrapped in is made out of oil.
Right.
Okay. Every transportation truck that takes that bread from the bakery to the neighboring states and cities, oil. So those costs have gone up. They have to be passed on. Every food product is now feeling that. The other thing is there's a real problem with supply because of the problem with Ukraine and the war and Russia, that fertilizer is in real short supply. So now the farmers in the United States, if they can get the fertilizer, are paying through the roof. And some of them aren't even able to plant. And some of the imports that we get from certain countries are cut down to minuscule supplies. So there's a very huge concern that we're going to have some food supply issues at an irritating level here in the United States, but at devastating levels in some of the developing countries.
Got it. Okay.
But again, I'm not an economist.
Right. Same here. That's why sometimes people ask me about stocks and this and that. And I'm like, then you have to do that little capture thing so we don't get sued on YouTube.
Yeah, follow me if you lose money.
Well, here, stick with us if you don't mind. Let's start answering some questions.
Okay,
I love talking to you. I really do, because you know what you're talking about. You talk facts. You give direct points, and I hate just the ones that just rates are going up.
Oh, we're gonna crash.
Yeah,
it's insanity.
You know what I'm talking about. All right, Nico, if you can take the controllers.
Yes, sir. I got you.
And Rick, you can answer anything that you would want.
All right.
Okay.
Got a first one for you guys. Hey, how are rates these days for DSCR type of loans? More specifically, I'm trying to go this past for a 3-unit investment property. Are these types affected by current interest rates? Vitality, yes.
The DSCR. Rick, do you know what DSCRs are?
No.
They're a debt service coverage ratio loan. They're kind of like, and that's what was scaring me a little bit until you really dig into it. They're kind of like those no income, no asset kind of deals. But you got to strip out the no assets, and you kind of got to strip out the no income. What it is it's basically as long as the property cash flows. So if you're buying an investment property, let's say if the mortgage payment is $3,000 and your leases equate out to $3,000 or more, you're good to go. So just recently, those rates has jumped quite a bit, probably 75 basis points, because the demand is huge. Because a lot of people are doing it because, last year there was rental forbearances and moratoriums that you didn't have to pay rent. So a lot of the landlords and such, they didn't file, or they didn't get a lot of rental income. So it's very tough to qualify now. So rates have jumped in that category. So if you can fit into a conventional loan when you're looking at that, or FHA, because if it's a multi-unit and you're going to live there, you can actually go to 3.5% down on a 4-unit building, believe it or not, and still use that rental income to qualify. But the DSCR program, those rates have spiked about 75 basis points on average, just because the demand is huge and rates are going up. But it's again, like any other asset, it's a supply demand. The more and more people needing that program, the higher those rates are going to go. Why? Because the lender can do it. Why are your rents going up? Because the landlord can do it. Okay, so that was one for me. Let's see if we can find one for Rick.
How would the housing recession thing affect construction?
Well, again, that all depends on the regional impact. How strong is the recession? How long is the recession? I mean, back in the 70s, we contracted by 9% one quarter. Right now, we're contracting about 1.5. So it's kind of a little blip. It's not that big of a deal. We've got supply issues. That's what's really holding construction back. So going out and saying, look, if we've got economy that's contracting, but yet at the same time, some of our supply issues are going away and we can build houses faster, it may not affect construction. People may say, you know what, I can finally get into that house without waiting for a year. So it's hard to tell. It's we manage the transaction. I like to tell people that we manage you through the minefield of regulation, because buying a home is not easy. And so there's a lot to it. The other thing in this market is iBuyers. Do you have many of those in Chicago?
I don't know, to be honest with you, because that's why I have like gentlemen like you on here. I don't have boots on the ground here. So when we get it, we're just doing the transaction. I don't even pay attention to who the buyer, the seller is.
We have two major iBuyers out here in Arizona. We're kind of the test market for that. It's Open Door and OfferPad. Open Door being the larger one. They finally turned a profit. How they couldn't turn a profit while real estate was going up 29% a year beats the heck out of me. Zillow was doing it like crazy. We all know what a train wreck that was. Then we have OfferPad. And so what they do is they buy the house, they charge you a fee. They started lowering their fees. They used to charge almost 7% transaction fee instead of a commission. And then they hit you with a lot of repairs. And so that kind of gives them some wiggle room for profit. But right now, I saw today that OfferPad is offering buyer broke commissions up to 5% if you bring a buyer to purchase one of their homes. What's that tell you?
Hey, speaking of that, I did have a client I talked to yesterday, now that you mentioned it. What she did is she sold her house back over in, I know where I got her from. You had me reach out to a client. Here's what happened was she sold her house through the OfferPad or the whatever. She was so, excuse my French, pissed off. She said she sold it within like 48 hours. She saw it already listed on the MLS for $50,000 more than they gave her. She was livid. And that's why I'm like, how do they do this? Well,
you got to don't move fast, folks. Just, call somebody, call an agent and go, hey, I got this offer from this iBuyer. What do you think? Do some research. And there were also some solar components in that too. Oh, yes, we'll give you the house, but we're not buying your leased solar panels.
That was her. Yeah. I talked to her and she's livid over that too. She got sold a bill of goods on that one, and then you don't even own the thing. They can come and take it. It was a train wreck. Do you do a lot of construction? Like do you take people to the big construction companies and have them pick homes there? Do you stay with?
There's a few out here that they don't even offer a commission if you go out and sign them up, and it's. I mean, I've lost a lot of deals where buyers just go, oh, Rick, I went ahead and went to that new construction thing in Queen Creek or Maricopa and got a house.
If you ever do, please help them read the contract. They are so bad. Basically, the gist of it is they can, and I've read several of these.
They can raise the price.
Well, they can take 2 years to build. They can raise the price at their discretion. You basically are forced to use their lender. And if you don't, they make it miserable. And their lenders wait until 30 days prior to closing because they said they just got the final notice, and they basically slam you through the process at higher rates, higher fees, and higher everything. You just get bamboozled. And then
our last contract, Dan, go ahead. Our last contract said that the contract literally states that they can give us 3 days and we have to close the loan.
3 days. So they held up documentation back to us from like the water certs and all that stuff until 3 days, and then said, we got to close this it was Tuesday. We got to close this on Friday. Now we were asking for a whole month. They pulled the rug on the guy. They sent his money. It appraised for like 60,000 more. They pulled the rug, put it back on the market and said, too bad you couldn't. We're like, we can't make it happen. There's
not legal.
You have to get the CD out and all this other stuff. We couldn't do it. And
it was they have a tendency to get ugly if you don't use their in-house lender.
Yeah. And then they just screw you. Yeah. So whatever. But I was just asking if you ever do that, because the contracts are so. I plead to people, please get an attorney.
I got another one for Rick. Rick. Yeah. How many times in history has the market gone up 100% in 2 years? I guess to either one of you guys.
We've gone up 50% in 2 years, so I don't know when it's gone up 100% in 2 years. What part? But I don't recall this a period like this. This may be the highest. When I look, the only thing in history, going back from 1950 to now, two of the highest price spikes were 2006 to 2007 and now. And but it wasn't 100%. It's like 50% in Phoenix. Maybe there's some areas of the country, but and
you're a cooking market too. It's not like you're just an average market. You guys are a smoking market. You look at the norm. You look at like in my neighborhoods. I mean, I bought this house 22 years ago. It's probably worth 20% more now in 22 years. So, in Illinois, our appreciation stinks. So when you come out, when somebody asks, Jason, where are you coming from? That wherever you are, it's up to 100%. Because if you told me that, I would be a proponent saying, yeah, you're in for a dip there. Maybe not.
Yeah. Well, I know Boise, Idaho got hit really hard. So
that's because they were up so high.
Yeah, you can always
but then
find
they're also turning
captions.
really quick right now.
Yeah, you can always find those
Vancouver.
Captions. You want to be sick about something. Look at college tuition. That's the next bubble that's going to, I think, pop. All
right, Dan, I got one for you, buddy.
Yes, sir.
Is it a good idea to get equity from your house? Will today's borrowed money be the cheapest borrow money we'll ever see again?
No, I don't think that. And I'm also a proponent of don't if you're pulling out the money for some necessities, like if you're paying off a 20% credit card, or there's some purpose for that money. Would I be a proponent of pulling out all the equity in my home, throw it in the bank at 0.00001%? No. That's just my proponent. Rick, you go ahead and take a swing at that one if you don't mind. Would you pull all the equity out of your house just cause?
Don't. It all depends on your needs. I mean, if there's an opportunity for you, and that money, that equity is not yours until you do something with it. So there's that component that says, I got $500,000 in equity here, but I'm going to give it to my kids. Well, by the time that rolls around, it may not be there. So maybe there's an opportunity to either purchase another property or some other investment vehicles to do that. But again, I'm not a financial advisor, but sometimes it's not smart to completely sit on your hands with all the equity. But it's not a good idea to remove it all and put yourself in the danger zone of being upside down if the market turns. Because look, if you bought 2008 at the peak and you stayed put and you refinanced along the way, you've paid down that mortgage. And right now you're sitting in the catbird seat. You're good.
Now, that's one of the things I like to say too. Even if houses don't move a penny in 10 years and you bought that house, you still have now equity in the house because you paid down that lien.
And your payment doesn't go up unless you're in a condo or a townhome where they're raising your HOA. But your house payment, your taxes, yes, they'll go up depending on the state.
Chicago.
Yeah. California is locked in. I think a certain percentage. Arizona's locked in, I think, at 5%. So, but somebody asked me what my YouTube page is, and it's Rick Helps. So
I'll actually put it down in the description, but I will also put it. I don't know how to post it on here. I promise you, I'm going to put a link to your website, your website, and your YouTube channel.
Dan, I want to have a real estate summit on here. We're going to bring in all the YouTube players on here. There may be about 10 of us.
Count me in.
So yeah, I figured I'd get that. So we'll get Jeb in. I got a gentleman in Minnesota. So I think we could have fun. I just came up with that idea today.
And that's what actually I was talking about that today because I put a little survey up there. What do you guys really want to learn about? And everybody just said housing, the housing market, real estate, and so forth. And I'm like, so I'm sitting here beating my head against the wall, telling people about interest rates. I'm going to kibosh that and start another channel. And I'm trying to figure out what the name of the channel would be because what you just said is exactly what I would like to do. Talk to you guys because you have boots on the ground. I'm not a realtor. I don't have the data that you have. And I just want the honest that's why I called you. I just like the honesty and I love your videos because you just tell it as it is. And that's what I'm looking for.
We've teamed up. I've teamed up with 2 real estate agents with another brokerage with Century 21 and Jackie and Ruby. And we do a news format. It comes out at 6:00 on tonight, Thursday nights, Arizona time. And And so we're trying to do the same thing, just like, what are you seeing out there? We call it market insights. And we're two different brokerages. Sometimes we have two very different opinions, and I have a lender friend on there as well. And the whole idea is to say, well, here's the numbers, and here's what we see when we're out in the market.
Right.
And then we'll be bringing on guests like you are as well, because if you're a consumer out there, the whole thing is you've got to know what's going on, because when I moved from the Seattle area down to Southern California, I had no idea what house cost. There was no internet. You go to the grocery store and you get the magazine, you pull it out.
Yeah.
I couldn't tell you if inventory was going up, down, or sideways. And that's how mistakes are made. Because I didn't feel like I could write an aggressive offer, and the agent didn't know either. So you reach periods where you go, look, you don't have to write an offer higher than asking right now, and here's why.
And just so the viewers out there know, Rick is one of those ones where I'm reaching out to realtors and I kind of vet them a little bit, but I can guarantee you the next client that we have in Phoenix is going to Rick, because you're hearing him. He has a passion in what he does. He has the data. He has the wherewithal. He's been doing it. He does it for a living. That's who you want to work with. Somebody who knows, other than, just pay a 1% commission fee and don't worry about it. We're going to get you tons of money. Run, please run. That's all I can ask you.
Yeah, I always say the hardest part of every real estate transaction is not the price negotiation. It's the inspection period. Hands down, every time.
Yeah. Is that why a lot of realtors don't like FHA?
Yes.
Okay.
Yeah.
That's what I thought, but it's like nobody will
you got peeled paint on the back down by the foundation.
It's a pain in the ass. Yeah.
Yeah.
All right, Nico, any more down there?
I mean, we got quite a few more. I'm not sure we're going to be able to help on this one, but opinion on Puerto Rico real estate.
I think we can. So just to let you know, Rick, I think I let you know, is I moved my team over to Allied First Bank. We are now the main purpose for that. Now, let me explain what's going on there. I'm now kind of we're in a mortgage processing division of the bank. Okay. But what that means for it, all it really means, I'm still a broker. I'm still able to access about 120 lenders. Plus, I have bank products. But the biggest reason for this is we have people all over the country, especially as the comment down below. Can you help in Puerto Rico? I'm pretty sure we can, because now we are federally chartered, where we can do basically every state in the U.S. But I'm almost pretty sure Puerto Rico is a part of that. So if you don't mind, is it Denise? Email me or Nico. And I'll check on that first thing tomorrow, and I promise you I'll get you an answer.
Just a little shout out from Rick. Rick does a great job in Phoenix, keeping everyone informed on the numbers and what's happening.
Now, Jackie is on our show. And,
awesome.
and she has been a loyal follower for a good year. And we brought her on the show on a Friday, and we said, we just got to keep this going. She's been doing this out here 32 years. You talk about somebody that really knows the market. So it's great to have those market insights.
Jackie, I'd love to reach out to you.
Oh, you got to talk to her. She's fabulous. Her and Ruby.
Does she know Fair Fawcett and the other girl?
Oh,
Charlie's Angels.
I'm going to say no.
Just kidding. You know what I'm talking about, right? Nico has no idea, right? Yeah.
Poor lady.
Charlie's
gets that
Angels.
all the time.
Jacqueline Smith was a.
I mean, I know. Yeah, I got.
Okay. I'm assuming she's not the same one.
Yes, that's safe to assume that.
Okay.
All right, guys. I'll take Rick. How much are home values going to drop by 2023?
I have no idea. And I say that every time somebody asks me. There's way too many components to figure. If somebody's telling you they're going to go down 15%, 20%, 30%, they don't know. Now, look at the forecast that came out by Zillow, Realtor.com, CoreLogic, National Association of Realtors. None of them got it right. And in fact, Realtor.com said that interest rates by the end of 2022 were going to be, you ready for this, Dan? 3.7%.
I remember. So again, like I said with the Fed said they're not going to raise rates or do anything till 2023. And that came off the board fast.
Yeah, so it depends. I mean, the Fed does a couple things. One, they tell you what what they're going to do in an effort to steer the markets towards moving numbers, and that may not be what they want to do at all. Remember, they told us that inflation was transitory. Don't worry, it's going to go away.
Yeah.
Now you got a Treasury Secretary who says, I don't see any recession coming. So, here, these are the two big movers in the financial markets in the world. And so, little Rick, and yes, I'm in my RV.
It's a sweet RV too.
Yeah.
I'm loving the light. You got better lighting in your RV than I do in my studio. Well,
that's my slide out. It's really it. I love this thing. It's I planned on taking a really long trip this summer, but thank you, administration, for the gas prices. So
yeah. You mentioned you have another show to attend. Do you need to get out of here?
No, we record those earlier.
Okay, got it. I just didn't know if we needed to drop you off, and you and Jacqueline and whomever else is on there do that. But also another kind of going down that avenue that you just talked about, all Zillow and those companies that were just buying up the market that got hammered, they're not a bunch of dummies out there. So what's happening in the housing market and with interest rates and everything, it threw a lot of people for a curveball. I'll admit it, I was on the transitory bandwagon too, because here's my thought behind it all. And I preach this all the time, and I got to stop. Is in 2020 and 2021, you had the forbearance, you had student loan deferrals, you had rent moratoriums, you had all this stuff, and you had all the stimulus money going out. So I did a study, and it showed in 2021, people had the most disposable income ever in history. Okay. How can that be when the whole world shut down? All right. So I even said back at that point, well, my assumption was, well, once all that stimulus and all the forbearance and everything ended, it's going to take 6 to 8 months, a year to come back to people got to go back to their jobs. People have to get back to the budget that they were using. People have to start making their mortgage payment and all that other stuff. It would come back to normalcy a little bit quicker than we saw. But then we had the Ukraine war and all the other stuff, and it's not happening. And I was wrong.
Yeah, we need to pivot when we can. I mean, we can prognosticate all we want, but it's to the point now when I log in the morning and I look, when I pull in the MLS, I look and I can look at one number and go, ooh, that's a lot different than last week. And, about a decade ago, I had a broker walk into a meeting and say, how many active listings are on the market today? And I felt like such an idiot. I couldn't answer the question.
Yeah.
And so it really makes a difference to know the disparity between supply and demand. So even though we got 10,000, almost 11,000 homes on the market right now, a normal market's 27,000. So, don't think that we're getting near a price reduction or price crash yet, or even prices going down 5% yet, but it could change quickly.
Yeah.
Well, and that's kind of, go ahead.
Yeah, with rates going up the way they're going. And, if people are starting to feel, I still can't believe consumer confidence is actually up as high as it is. If I'm out there and I have a normal job, I mean, even in this business, in your business, it's scary. If rates hit 8, 9, 10%, I might be greeting you at Walmart, because
rates are one thing, but not to beat a dead horse, but gas prices are putting the brakes on everything.
That's why I think a lot of the pieces of the Fed's puzzle is going to somewhat get corrected by oil, and you hit it right on the button. And that's why I track oil every day. And, I think a lot of people don't get it. You just said one of the parts of that is it's in things that most people don't realize. Plastics, if you look at what oil's in, it's in everything.
It's in everything.
Yeah.
And, and then, what you're buying today was shipped to you from somewhere.
Right.
Yeah. So,
yeah.
And it's not going to be electric anytime soon. And even electricity, not to get in a sandbox, but, look, a battery doesn't produce electricity. It just transfers it. So it has to be produced somewhere to put into the battery.
Hey, Jeb just bought an electric vehicle. So, jab him about that.
Yeah, well, you have to when you're in California.
Yeah, I know. And he's in a complete different environment than a lot of us are. God bless him. He's a great guy. Yeah, I thought I pissed him off a couple of years ago. I found him on YouTube and I reached out to him. He was kind enough to call me back and then 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 stop calling. And we was so busy that I just lost, and I figured, well, I'm never going to hear from him again. And then he was kind enough to pick right back up with where we left off. So good for him. But Nico, anything else down there?
Yeah, I mean, we got quite a few. Give me one second.
Anything Rick can cover for us?
You
can leave the financing piece to us.
Anybody have any RV questions?
Yeah, RVs.
Yeah, right.
Fishing? You out there fishing?
Well, again, I see a lot of people in the comments saying, they're kind of waiting for the market to bottom out. I'm seeing that everywhere.
So pop the next one up and let him kind of cover that. And just kind of go over, some of these too. I'd like to see, where the people are, because like, especially the person with the 100% increase in value. I'm sorry, guys, there's a huge glare here. The 100% increase in value. God bless you if you're in that area. I hope you own a house. And I'll say one more thing. All the naysayers. You have where it's like, I can say the stock market's going to crash year after year after year after year after year, and then eventually it crashes, and I'm a genius. So that's one of the things that it frustrates the heck out of me, because a lot of the naysayers too have been on the sidelines for the last 2 years. Well, Rick, how much did you say appreciation out there was in the last 2 years? 50%?
A little over 50%. But the way I view a lot of those channels, remember all the YouTubers that were out there giving you the stimulus check updates?
Yeah.
They exploded.
Getting millions of hits.
They were making a lot of money off of YouTube. Where are they today?
Yeah.
And
if they were smart, they spun it.
There. What's that?
If they were smart, they spun it to something to give value. But I mean, at some point, you just can't just keep.
Well, if the market crashes, do you have 2 years of the YouTube channel saying, I was right? I mean,
yeah. And then go from there.
I think you do a disservice if you just, it's okay to give people warnings and say, but give them concrete data, because 2006, if you're paying attention, you could see it coming.
Yeah, I was in it.
Kate Schiller was one of those.
Yeah, when I was in it and I saw it, and when I started seeing the Ninas and the this, and then I'll be blunt. At that point, I was working with a lender, and I kind of head up their mortgage division on the mortgage piece. We'd go out to brokers. The fraud was insane. You would go and everything ran under that Nina program, no income, no assets. So what they would do is they would just go in the back room, and they would make, jobs or companies for people that somebody would work there, and they would actually buy an 800 number. So you could call that number to validate their jobs. And this is all within the brokerage. Yeah. And it was like, are you guys kidding me? I walked out of probably 50 places, and I'm like, never go back there again. Yeah, so, I mean, it was nuts, and people don't get it. And that's, unless you lived it, you don't get it.
So,
there's a question down there for Rick. I see it.
All right, Rick, do you have a YouTube channel?
What's the gas mileage like on your RV?
Well, it's a travel trailer, so I tow it with a truck. So it's 26 feet long bumper to hitch, and it's got a slide.
The next one is, what kind of battery do you have in that RV? Blue Eddy? Dude, you're getting the questions.
No, it's
we do have another one for Rick, and this is going to be specific to Arizona. Opinion. I'm buying buying a new build in. You got to pronounce that city for me, buddy.
Maricopa, Stacy.
Maricopa.
There's some nice new builds down there. I think the waiting time is still there. It's hard. I look at the Maricopa numbers, city of Maricopa, and that's a city where the resale homes sales are really dipping and inventory is really climbing. And one of the reasons is because there's so much new build going on. And the construction for resale homes in Maricopa, as a rule, has been pretty poor because they slapped them up real quick during 2006 and 2007. But now they're building some really high quality units out there. Where the prices are going to be down the road is anybody's guess, but I can tell you that you have a lot of choices, but you're going to wait a while. There's still a waiting list to get almost 10 to 14 months to get in the house. So.
And Stacy, if you want to talk with Rick, all his information will be down in the description right when we're done with this. I'll post all his information. I'll give you his phone, his website, his YouTube channel. Everything will be down there. So if anybody's on here and you want to talk with Rick and just, what's out there, what can he help you with? I'm sure he'd be more than happy to help you. And that's why we have him on here.
So I can show you my little,
let's take a tour, bud.
there's my kitchen and
Sweet.
and stuff. And then it's got my dog is down here.
Nico's is in his background
Ringo.
too.
Oh, I got a couple back here, man.
There's Ringo. He's back there. He's there. He is. So he knows he's on TV now. So
so the place that you are, what's there? Why'd you go there?
Well, it's really hard to escape on the weekends here because all the parks fill up. And this is 2 hours north of Phoenix. It's called Point of Rocks. So we got up to like 95 degrees today instead of 110 in Phoenix. There's a lake here called Watson Lake. But it's a very nice, really kind of secluded little area. It's only 5 miles to downtown Prescott.
Oh, so just a getaway, basically.
Unhook the truck, go down there, walk around the town, and it's
pretty
cool.
Too?
I just like it here. I'd like to go up to the White Mountains, which is an hour and 2 hours out of Phoenix as well, up in northeast of here. But it's really hard to find spots lately up there. And
so what brought you to Phoenix? It's so damn hot.
Well, I was in like I said, the bread business. So I went from Seattle to Los Angeles to Albany, New York, to Rochester, New York, and then came out and accepted a job in Phoenix back in '96.
Okay. And been there ever since.
Yeah.
God bless you.
So it's that's how I ended up here. My youngest son turned 1 in California, 3 in Albany, 4 in Rochester. Yeah, 4. No, something like that. Just different city. He thought he got a new house every time he had a birthday. So
very cool. Very cool.
Awesome.
All right, let's see what else is down there. And I know it's been an hour, Rick. So I know we'll just finish up some of these questions and we'll sign off and let you go. And I promise everybody I will post all of his information down below. If you guys would, please don't forget to give us a thumbs up. It helps the algorithms. It helps us get noticed a little bit more. And that's all I ask of you.
We are seeing some FOMO from sellers. Keep in mind, there's a lot of sellers that have contracts on new construction, and now they're like, "Oh my God, if house prices are going down, so they're trying to get out now." And I say, don't panic. All I'm saying for sellers right now is just be realistic in your pricing. Now's not the time to shoot for the moon, and it's time to start being nice to sellers. You'll sell your home. But you can't roll back and say, I'm not fixing anything. I'm not helping you with a home warranty. That's in the rearview mirror.
Yeah. So I had this question today and I didn't really know how to answer it. And you probably say the same thing I did. I can't guide you. They're saying, I have a house right now. I'm looking to build and it's going to take at least 12 to 16 months to build. Is that a wise decision? I was just like, I don't know. I don't know where houses are going. I don't know where rates are going. I deferred. I hate to do that, but I just, what would your opinion be on that one?
I can always get you out of a contract. Sometimes it's just hard to get you in one. So,
good call.
If you're looking at a new build and you're not sure what's going on in the market, there's plenty of ways to get out of it.
Well, that's what we thought. But again, when you look at these contracts, it's I guess in the one that we had, we got the money back, but the pisser was that while that wait time was going on, they rented, lived with family. They were gung ho to get this house. It appreciated $850,000, $60,000 since when they signed, and then they had 3 days of close and lost everything. They not only did I don't even think they really cared about the value at that point. They just wanted the home, and it was just a shitty situation.
Yeah.
Yeah, I hear a lot of horror stories. So.
Yeah, it's a shame. But
I found one more for you guys. I think maybe one more for Rick, unless more came over. In December, Zillow, Trulia, and Realtor.com, all these online realtor companies removed crime rate zones on their websites and apps to increase home sales. Is that fair?
Well, I think they just weren't trying to play there. I don't know specifically why they did it, but my guess would be that, in our ethics, if you ask me if this is a good neighborhood, I can't tell you. I send you to online resources so you can look for it yourself. So these companies probably wanted to remove themselves from the liability of having the crime maps on their sites.
Really?
So they probably want to say, we're not going to put the crime maps on our sites, but there's plenty of other resources where you can go get it, because I wouldn't want to be realtor.com and have you come to me and go, your crime stats were wrong, because you can get sued a million ways to Sunday. So I think they just wanted to get out of that entirely, because there's a lot of room to get sued.
Got it. Cool,
one more for you guys, Dan, because okay. All right. Do you guys think the housing market has been artificially inflated in the last couple of years with the government and Fed stimulus? If so, do you think that now there is no more stimulus, prices have to fall?
That's so I think the short answer is yes. I think it's very obvious that the reason that prices went up was because there's $9 trillion on the Federal Reserve balance sheet. No escaping that, no arguing that. Right. But people were buying not the price, but buying the payment. What is the average house price compared to the average wage? And that's the number that should be tracked. When they're going to, and this is the tricky part, the Fed's going to try and balance right now. As we pull back, as we take the punch bowl away from the party, are we going to have really bad consequences, or can we ratchet this down slowly over several years? And that's what they're trying to figure out. So I'm going to let them try to figure that out.
Yeah, right. And one of the ways that the assumption was on the balance sheet too, I think the Fed even thought this could possibly happen, was the runoff. So what happens is the Fed buys the MBS market, the mortgage-backed securities, and as people refinance and sell their houses, that basically that bond for that particular loan, I'll just say it that way, gets kind of paid off.
Right.
Well, rates are so darn low that there's probably going to be no runoff unless, very few people are going to refinance. Our refinances went from 80% of the business to nothing. Yeah, and, now there's not a lot of people selling, at this point too. So it's the runoff's not going to be there. So they're going to not only, they're not buying MBSs, they're going to actually start selling it in the market. And that's one of the biggest things that scares me as well. And I've never seen it in my lifetime. And you've been probably doing it as long as I have, where rates move every day by, up to 0.25%. It's insane. And on our side, we'd lose sleep because it's like, what's tomorrow going to bring? It's like the stock market every day looking at it's down $500-600 after a while. And that's why I was saying, bringing this into consumer confidence, I have no clue how consumer confidence is where it's at today.
Yeah. And people need to not weigh so heavily on the mortgage rates that they see online.
Yeah.
Many of those are teaser rates and it changes all the time. And the mortgage rate depends. I have a friend named Pat, and we always kid him because he's a lender. Go, Pat, what's your rate? There's no such thing. Dan, what's your rate? And people do that. They get on the phone. Right. Dan, what's your rate? Pat, what's your rate? Rick, what's your rate?
I get it 10 times a day at least.
Yeah, I always say, what do you want it to be? It's like there's more to the story. That's the first thing I say. There's a lot more to this. And then they don't want to give you any information. I just want to know the rate. It's like, it's not that simple. I think we had Pat rate on here. Pat might have been on here. Does he go by Patrick?
I don't think it's the same Pat. No.
Okay. I have a son named Patrick, and I didn't know if he was on here either. So let's see.
I have another good question. At least I think it's a good question for you guys. All right. So with all these overinflated property appraisals, aren't millions of these homes will now be upside down? Does that make sense? With all these overinflated property appraisals.
And again, it's going back to the 2008 thing. So let me put 2008 in the context. And one piece of that puzzle too was even appraisals. Now, Rick, you've been doing this a long time. You probably know when you got an appraisal done 10, 12 years ago, you'd call up Steve, say, Steve, I need this appraisal done tomorrow and I need 480. And you'd had it tomorrow at 480. Yep. Those days are gone. So when you say, we'll go back to Rick's comment. Rick, you go ahead and answer that question. The inflated property appraisals. Again,
the appraisals are not inflated. There's been more of a problem of not hitting the purchase price. That's why you saw so many appraisal contingency waivers built into contracts. I'm gonna give you $480,000 for this house, but if it only appraises at 450, I'll cover the other 30K.
Yeah.
So people are coming in with far more down, and they have a lot more equity now. Remember, the majority of the homes, it's a broken record, the ones that crashed 2008, are simply because they didn't have any equity and they had this adjustable rate. So you're at a house that's got like either 1% or interest only, and your payment's $685 a month. And your agent is telling you, you've already got 45,000 in equity. Wait until next year, you'll have 90,000 in equity. And they go, yay. Well, next year the rate resets to 7%. There went your $600 payment, and you didn't build any equity. You hand it back to the bank.
Right.
So I don't see that scenario repeating right now. There's too much equity out there. There's going to be some people that are getting in trouble and they're going to foreclose, but we are so far below the normal rate of foreclosures that it just, if you ever look at the foreclosure chart, it's staggering how high it was and how far you have to drop to get upside down.
Well, it was like the comment that the person just made, saying their house values in the last 2 years is up 100%. So there's no way, if that was true, nobody would get foreclosed on. You'd just sell the house. You'd have
if you bought
so
2 years ago.
equity.
If you bought 2 years ago when the crashers were telling you it was going to crash, we've gone up 50%. They're telling you prices are going down 30. You still got 20% equity. I think you're okay.
Bingo. And that's what I'm trying to get through to everybody. Now, if you're buying today, I don't know what the next 6 months, the year is going to be. It could be, could be bad, could be good, could be fantastic.
Look,
again, like Rick said,
being upside down is only a problem if you have to move.
Right. And that's why I always plead, and you said it, I heard you say it, and you say the same thing as I do. Buy if you're going to be in there at least 5 years or more, because you're going to be okay. If your plan is to do this and flip it or do like cryptocurrencies or whatever, don't buy, because all the transactional fees are going to kill you. So,
yeah, and so that kind of answers your last. This from Cool Name says, how will these people not go upside down? And I think that's another good point you guys just made. If you're upside down, it doesn't mean you're going to lose the house as long as you're still making those payments. Am I correct, Dan?
I've been upside down several times in my house journeys.
Same here.
And and you look and you go, well, I guess I'm not. I mean, I bought it my very first home. I bought a condo in Everett, Washington for $33,400, and the market tanked. And it was that other recession I was telling you about, Paul Volcker, the Carter years and stuff. And I needed to buy something. I thought I could buy it, sell it, and then go get a house. It was a little 1-bedroom condo, 598 square feet. And so we eventually bought a house, put a renter in that thing. I held on to that thing for 10 years, and I put $3,400 down on that house. 10 years later, I sold it. I got $3,400 back. So I wasn't upside down, but I rode the wave down and back up.
Yeah.
and I did really good on the other house that I bought in Seattle. I took it on the chin in California, terribly. Bought for $212, sold for $150. And then moved to New York, down a little bit, broke even, came out to Arizona and did very well. So it all depends.
It's like the stock market too.
And, and I that was a lot of corporate moves, so they covered my expenses. So, but if it was me today, and I was buying in this market, I'd be committed to staying there for a while.
Got it. And then the next one, and Nico, if you can bring up the last comment.
Yeah, I saw it, baby. I knew you were itching for it.
Here's the predicator, whatever word I'm looking for. Because everybody, all the naysayers, everybody, their one piece of the puzzle is always, well, look at 2008. Look at 2008. Well, strip out 2008 in history. What else do you have? Have you ever seen that before? And like Rick said at the beginning, it happens every 70 years. Dude, if you're buying now, you're not going to be around 70 years from now to sell it or see what's happening in that. How would you answer that one?
Well, I mean, they let the property foreclose because it was financially easier. It was only financially easier because you had a stupid loan on it. Your payments were out of control. If you were sitting in your house today and you got a fixed rate and it's 5.5%, and you can handle that payment, and the value of your home goes down, and it's going to be down for 2 to 3 more years, maybe dramatically. If you're still employed and you can handle that payment, who cares? Because you're going to pay down the equity. You can refinance, because if it really gets that bad, rates are going to come down. So you can refinance. You'll be paying down the equity, write it out, and you'll be okay. There are no guarantees in house prices. So people are waiting for it. Nobody rings a bell and tells you you're at the top. Nobody rings a bell and tells you you're at the bottom. So you're the only one that can determine that. So you just got to stay on top of the data, stay on top of the numbers so that you can get in when you feel comfortable. And I like to tell people on my channel, I share the data with you so that not only can you know the numbers, but you'll be a hit at all the cocktail parties.
Exactly. That's what I try to do. But unfortunately, you and I get about the same amount of clicks. And then isn't it frustrating, though? You see these kids or whatever out there doing all this, the world's going to end and this is that, and they're getting hundreds of thousands. And it's like, guys, but your whole agenda is based on 2008. If you just give the facts, and if the facts were, rates suck and housing market's going to crash, I'd be on here, and Rick would probably be on here saying the same thing. Guys, yeah, we're in for a crash, but we're not.
Yeah, it goes back to my ski lodge analogy,
Yeah.
If it looks like we're going to blow past the lodge, I'm going to tell you. I see another question there on Patrick's asking about the interest rates.
I got you. I'll pull it up for you real quickly. All right, Rick, what's the interest rate?
The interest rate on that condo was 10 3/4 when I first got in it.
Fixed?
Then they started dumping them because the bank was just unloading them, and the contractor, and it was really eroding the value of mine. And I negotiated with the bank when I had a renter in there, because we just had our first child, and I think I got them to give me an adjustable rate mortgage at 4.5% for 1 year to give me time to make the adjustment for, being able to at least get it to cash flow with the rent. And then it clicked up from there. I think it got up to about 7.5%, and then I sold it.
Got it.
When things got tough, there's nothing wrong with calling your bank and saying, here's where I'm at. What options do you have?
Yeah. The good news about this, the pandemic that we had, like I refinanced my house. I don't even pay extra. I have 2.625 on a 30-year fixed. I'm like, in a normal market, I can earn more than that in my returns. Lately, I've been clicking in and seeing, oh god, Dow Jones is down another 600. It's like, oh boy. But
yeah,
I mean, the payment. Here's another thing that a lot of people don't understand too. With those channels that just pump the fear. Your rates are going up. Your payments are going to go up. Your payments are going. No, once you buy, you're done. Like Rick was saying, your taxes are going to move up and down every year, and it'll adjust toward it. Same with your homeowners insurance. But if you look at rents in the past year up 18%. Last year was up 15%. So rents are going like crazy, and they're probably only going to keep going up because everybody keeps complaining that all these institutions are buying up the markets. Well, now they have their control. Now they predicate their ROI on how much rent they're going to charge you, and they'll just jack up the rent. And if you don't want to pay it, get out and we'll put another person in there.
Yeah. And, buying real estate isn't risk-free. I mean, prices could come down. There's no doubt about it. No doubt in my mind. Is there a risk there? Yes. But history has shown us if you stay put, you'll be okay, because you're better off paying yourself than you are landlord. But if you're buying at the peak right now and you're sitting back and you're waiting for a crash, we may have an adjustment. We may have home prices come down. Right now, we're seeing traffic come down. We're seeing listing success rate come down, but I'm not seeing numbers that say, wow, it's not looking good. I'm seeing numbers that are saying it's not going to be as easy to sell a home as it used to be. But there may be a time when the wheels fall off the wagon because, prices go up and they come down. But just because something went up fast doesn't mean it has to crash because it's not a car. And so it could be that we go up and we start seeing a dip, and then maybe through inflation, wages kind of start catching up. There's so many different ways that this can play out, or it could get insanely ugly. But as long as you're not planning on moving in 2 years, write it out. Just don't get an adjustable rate note.
Right. And those are coming back in heavy demand. The only thing I say on the adjustable rate piece of the equation, and I'd like to take your take on this. Some people might be their only way to get through now, especially those that have been under contract for a year building and so forth. So if you were to take an adjustable rate mortgage again, what would be your time duration? Would you look at a 3-year arm, a 5, a 7, or a 10? And I guess why?
Yeah. It all depends on your situation.
Yeah. There is no cookie cutter answer for anybody.
You have to look and you have to go, okay, I'm getting this rate. And then when it resets in 3 years, what's that payment like? Can I handle it? Okay. If I can't, then don't do that.
Right.
And can I handle the risk? In other words, is that adjustable rate fixed? So in 3 years it adjusts. Is there a cap that it can only go up 1%? Can I ride that out? Okay, great. I'll do it. If it's a 5-year note, I mean, look, I had, I won't say who, they had a mortgage and she was paying interest only. And she kept trying to get it refinanced and the rates were 7% and she didn't understand it. Well, why is my payment going up? Well, because you were paying interest only, and now you're paying. But I'm refinancing. Am I rates listing?
I know. It's tough, and that's
know the numbers.
That goes back to real. Hey, Eric Larkin's a realtor in Cocoa Beach, good guy down there. He's posted some great pictures, and he's similar to you, Rick. He dives in on the content, and I need to get him on here. Because I have a house or a condo down in Cocoa Beach, and he's a realtor down there. Great guy. And he reminds me of you as well. He knows his data. And that's what I like about you guys. Because I don't like just like you were saying, it's just here's this and here's that. Or no content or no specifics behind it. I love posting the content. But
it's fun stuff. So
so we've been on here an hour and a half. Rick, it was awesome to have you. I hope we can do this.
Thanks for the invite. It was fun.
If there's a round table that I could be a part of, or you want me to help create or whatever, I'd love to be a part of it with you because you're a joy to talk to. You get the facts, you have the experience, and anybody we have coming our way, it will be going your way. I can promise you.
For sure.
Appreciate it. I'm gonna go grill a steak now.
All right, man. Take care. Hey, folks, I apologize I didn't get to your questions. It's getting late here. It's getting dark. I haven't eaten yet. And but this was a huge success. So thank you to Rick. I'll post all his information down below. God bless, guys. And we will see you tomorrow morning at the opening bell with the rate update with Dan Frio. Thanks, Rick. Take care,
boys.
Take care.
Have a great night, buddy.